Most traders treat high impact news events, or drivers, like a coin flip. You see the 8:30 CPI release, and you pray the volatility goes your way. But what if I told you the market has already decided where it's going before the news even drops? This is called driver pairing. It is the core logic used in the model to align time and price. It's not about guessing the news number. It's about understanding the phase of price the daily candle is in. Is the market in protraction, forming the wick? Or is it in expansion, forming the body? Today, I'm going to break down the precise mechanics of how to trade with the driver's 8:30 news, 9:30 open, and 10 a.m. releases, so you stop getting chopped up and start catching the true expansion. First, we need to clean up your data. You cannot trade every piece of news. Filter aggressively. On your economic calendar, uncheck everything except red folder, high impact events. Yellow and orange folders are noise. Asset class isolation. If you trade indices, ES/NQ, or Forex, you only care about USD red folders. If you trade oil, do not look at USD news. Look at the energy calendar specifically. They are decoupled. In the indices market, we have a specific sequence of drivers. 8:30 a.m., the news driver. 9:30 a.m., the equity open driver. 10 a.m., the secondary news driver. Your job isn't to trade all of them. Your job is to identify which one acts as the manipulation and which one acts as the expansion. Let's look at the logic. The market operates on a simple binary: manipulation versus expansion. We use the driver to confirm which phase we are in. There are 3 specific scenarios you need to memorize. Scenario A, the established swing. If a valid swing point or protected swing is established prior to the driver's job is to expand away from it. The logic. Think of the daily candle. If the bottom wick, the manipulation, is already formed during London or pre-market, the driver does not need to manipulate again. The play. You are looking for continuation. If we have a change in state of delivery before the news, and we are holding a fair value gap or order block, the driver should result in a one-sided expansion. It shouldn't come back. Scenario B, the unestablished swing. If no relevant high or low has been formed, or we are sitting in a consolidation range prior to the driver is the manipulation. The logic. The market needs liquidity to move. If it hasn't grabbed liquidity yet, the news release will likely spike against the true direction first to tag a pool of liquidity. Failure swings. Create a reversal signature and then reverse. The play. Do not chase the first candle. Wait for the driver to sweep a level, form a swing point, and then enter on the reversal. Scenario C, expansion, prior to driver. If the market has already expanded significantly before the driver often acts as a retracement. The logic. The market is overextended. It needs to breathe or return to a PD array, point of interest, to refuel. The play. Expect the news to pull price back into a fair value gap or order block. Once it taps that POI, look for the expansion to resume. For my futures and indices traders, this is the golden rule of timing. We call it the driver handoff. If the 8:30 driver manipulates and creates a reversal, then the 9:30 open should be continuation. If the 8:30 driver consolidates or does nothing, then the 9:30 open must become the manipulation. You rarely get two manipulations in a row unless the market is seeking and destroying, which we avoid. Example, 8:30 sweeps the lows and rejects. By 9:25 we are sitting at a higher low. At 9:30 the bell rings. Do we short? No. The manipulation is done. 9:30 should aggressively expand higher to target the high of day. How do we confirm the narrative? We use SMT Divergence and CISD. When a driver hits a key level, like an old daily low, look at correlated assets, ES versus NQ or EU versus DXY. If the driver pushes NQ to a new low, but ES fails to make a new low, that is a crack in correlation. That confirms the manipulation. Positional entry. If you are advanced, you enter as the driver trades into the opposing candle, expecting the rejection. Confirmation entry. You wait for the lower time frame to displace away and leave a fair value gap. That is your green light that the driver has shifted from manipulation to expansion. When does this fail? You need to know when to sit on your hands. The large London range. If the London session has already moved 100 plus points and destroyed the ADR, average daily range, New York will often chop. The move is done. Driver invalidation. If you identify a failure swing that the driver should sweep, but the driver fails to reach it and just stalls, the profile is invalid. If the driver cannot accomplish its job, either manipulating or expanding, the market is likely entering a seek and destroy phase. Close your charts. To summarize the driver logic, check the phase. Is the daily wick formed yet? Check the swing. Is there a predicted swing prior to the news? Yes. Expect expansion? No. Expect manipulation. Check the handoff. If 8:30 did the work, 9:30 takes the credit. Expansion. Stop guessing the news. Start pairing the driver with the price action. If you found value in this breakdown of the GXT logic, let's look at the reality of the chart. Stop listening to the noise and look at the correlation. We are looking at June 12th, 2025. On the left, we have Nasdaq. On the right, we have the Dow Jones. Going into the 8:30 a.m. driver, we have liquidity resting below these overnight lows. The 8:30 news drops. Watch the Dow Jones on the right side. What does it do? It knives down. It trades through the previous low. If you are trading YM, this looks like a breakdown. It looks bearish. The driver has done its job. It has manipulated the low to grab liquidity. But now, shift your eyes to the Nasdaq on the left. While the Dow was busy taking out the lows, what did NQ do? It refused. It put in a higher low. This is your SMT divergence. The algorithm is showing its hand. It used the Dow to sweep the stops, but it used the Nasdaq to accumulate position. This tells you the selling is fake. Because NQ failed to make the lower low, it has identified itself as a strong asset, the lead dog. You do not want to short this. You want to buy the strongest asset. Now we wait for the 9:30 open driver. Since 8:30 a.m. finished the manipulation on YM, the 9:30 a.m. open should be pure continuation on NQ. Look at the NQ chart. The 9:30 candle opens. It barely wicks down. It respects that higher low structure perfectly. And then, detonation. The NQ expands aggressively higher. Why? Because the protraction, the wick, was handled by the Dow at 8:30. The expansion, the body, belongs to the Nasdaq at 9:30. This is how you pair the assets. Let the weak asset do the dirty work of manipulation, so you can enter the strong asset for the expansion. Stop letting the news drive you out of the market. Learn to read the driver, trust the logic, and let the expansion pay you. Trade safe, and I'll see you in the next one.